In today's show, the Bitcoin price is either heading to $12,000 or $8,000 next. Bitcoin traders discuss macro signs, which I'll be breaking down for you. In today's show, we'll be taking a look at what some analysts have to share, including Crypto Michael, Mohit Surout, and Nunya Business, who says Bitcoin overhead stepping stones. Number one is that $10,000 resistance and psychological barrier. Number two, 10,500, which is the first higher high, which changes the market structure. And number three, 11,600, last three cycles, a monthly close above the 50% Fibonacci retracement equals rocket ship to the moon. And number four is last year's high of $14,000, a close above this monthly all-time high close, always bullish into the moon. Also, in today's episode, India plans Bitcoin ban even as its banking system is gradually on the brink of collapse. That's correct. Check this out. The government needs to stop this madness of deciding whether they want to ban crypto or not. Either do it so we can fight it or come up with better regulations instead of throwing a news bite every few days, creating panic in public. We'll be discussing this and how it affects the crypto and Bitcoin market. Also, in today's episode, as we can see, a sea of red. Bitcoin, all the top altcoins are down for the day. Where's the Bitcoin price likely to go from here? Find out all this plus so much more in today's show. Here at Crypto News Alerts, I drop a brand new episode every single day. So be sure to smash that subscribe button and turn on all notifications to receive daily premium crypto news alerts. And before we kick off today's show, if interested in learning from the Wall Street legend Teeka Tiwari, who picked Apple back in 2003 and Bitcoin in 2016 as he shares his number one pick for the 2020s, they're calling it the investment of the decade. Right now, there is a mad rush in corporate America. It involves Amazon, Google, Microsoft, and Facebook. They're betting on a new technology that the World Economic Forum projects will soar 295,000% over 7 years, but it's not AI, the Internet of Things, or 5G. To discover what it is, smash the link below this video in the description and check out this exclusive presentation by the one and only Teeka Tiwari. All right, welcome back to another episode of Crypto News Alerts. I'm your host, JV, and let's kick it off by diving into today's top story of the day. The price of Bitcoin is still struggling to break out above 10K following three failed attempts over a 36-day period. And just yesterday, we hit about 9,900 resistance before collapsing and touching 9K and rising back to where we're currently at, which is $9,491. Traders remain mixed on the short-term price trend of Bitcoin as macro indicators suggest varying trends. Many traders believe the price of Bitcoin is primed for a rally above the multi-year resistance level of 10,500, which would confirm the end of a two-year price cycle and the start of a newfound rally. Others foresee the price of Bitcoin falling all the way to the $6,000 to $7,000 range in the near term. I know a lot of technical analysts are predicting this, which has given three consecutive rejections of the same range in between 10,000 and 10,500, spanning over a month. And I'd like to know, are you more bullish or bearish? Do you feel we're heading to 12K or we're heading to 7 or potentially 8K or even less? Let me know in the comments right down below. I'm more bullish, especially since the Bitcoin halving, which occurred last month, followed with the institutional demand like Grayscale Trust purchasing more Bitcoin right now than's actually being mined, which is definitely a bullish sign to see all these institutions coming on in. Historical data shows that declining volatility and volume suggest a large Bitcoin price movement will likely occur in the near term. For instance, the price of Bitcoin in early September of 2019 was hovering around 10,500 to 10,800, and at the time, the volume of both futures and spot markets declined substantially compared with the previous 2 weeks. And by the end of October, after a month of consolidation, the price of Bitcoin dropped from 10,800 all the way down to 7.3, recording a 32% pullback within 2 months after weeks of low volatility. So I'm going to be breaking down for you the bullish scenario as well as the bearish scenario for the short term. Traders generally anticipate a Bitcoin upsurge in the near term due to three main reasons: a compelling technical structure, an increase in the number of long-term hodlers, and a rapid growing hash rate. According to Michael van de Pup, a full-time Amsterdam Stock Exchange trader, the short-term trend to Bitcoin is optimistic as long as the price remains above 9,100. And taking a look at his tweet on crypto Twitter, Bitcoin slight wick now, which is fine. If we break 10,000, the next level is 10,500, and if we break 10,500, the next level is 11,500 to 12,000. Crucial level to hold is 9,100 to 9,300, and he included this graph, which I'll include in the show notes below the video in the description. So the 9,100 to 9,300 range has served as a strong support area for Bitcoin since May. If the price holds 9,100 and breaks above 10,500, once again, Van de Pup emphasized that 12K is likely next. Similarly, crypto trader Nunya Business said earlier this month that the following levels are the most important for Bitcoin to see a prolonged rally. And taking a look at this tweet from Nunya Business, Bitcoin overhead stepping stones. Number 1, we have that 10K resistance and psychological barrier. Number 2, 10.5, the first higher high, which changes market structure. Number 3, 11.6, the last 3 cycles, a monthly close above the 50% Fibonacci retracement equals a rocket ship to the moon. And number 4, $14,000, which was last year's high, a close above the monthly all-time high, is always bullish like a rocket ship to the moon. And then we have Mohit Saraut, a founding partner at Bitatsu Capital, noted that the price of Bitcoin is likely to break out of a 2-year cycle within 7 days if it does not see a sharp pullback during that period. Taking a look at his tweet, time for Bitcoin to break out within 7 days. And then he goes on to share a couple of direction agnostic methods to make bank on such moves. Essentially, you'll be buying a straddle, number 1, weekly move contracts, and number 2, or buy a call and put the same strike price on a derivative. Further, the expiration, costlier, the premium, risk management is the key. And then he goes on to share evidence of buyer interest. This level got the front run on recent dumps. Sellers just don't have what it takes to push the price down. Longed. Saraut also noted that the strong rebound to Bitcoin at 94.40, which is where its price opened at in the month of June, is strong evidence of buying demand. On June 7th, the price of Bitcoin dropped to as low as 93.60 on BitMEX. It saw an immediate recovery, rising to as high as 10,160 on June 10th. The investor explained evidence of buyer interest around BTC at the moment. Monthly open, this level got front run on recent dumps, and sellers just don't have what it takes to push the price down. The compelling technical structure of Bitcoin is supported by an abrupt increase in hash rate and a spike in so-called hodlers. Data from Woodbull, a market data platform operated by crypto investor Willy Woo, shout out to Willy Woo, shows that investors are increasingly accumulating Bitcoin at current prices, and that's a fact. If the waves that overlap the price trend of Bitcoin on the Bitcoin hodl waves chart rise, it indicates that more investors are buying Bitcoin with no plans to sell them in the near term. Previous bull markets were kickstarted by a spike in hodl waves, which typically is a highly positive signal that investors are becoming more comfortable with both the short-term and medium-term trend of Bitcoin. Willy Woo explained, the upper contours represent supply, old coins that have remained unmoved, while the lower contours represent new demand, coins that have recently shifted. The composite view clearly shows each bull cycle bringing in a new demand, and he shares this in this report called Bitcoin HODL Waves, and I'll include this as well in the show notes below the video in the description. The optimistic trend of long-term investors coincides with growing confidence from miners that the price of Bitcoin is likely to rally towards the end of 2020. Following a second difficulty adjustment in the last quarter, the hash rate of Bitcoin blockchain network surged substantially. The spike in hash rate indicates miners foresee the price of Bitcoin recovering back above 10,500 in the upcoming months. And we're taking a look at this chart from Coinmetrics. You can see the Bitcoin hash rate difficulty, which has been increasing after it has just adjusted once again. A confluence of strong technical structure for an uptrend and positive fundamental data, such as the growing hash rate and hodlers, raises the probability of a short-term rally. I'm leaning more on the side of a short-term rally versus a short-term pullback, but that's just me. I'd love to know your thoughts in the comments right down below. Now for the bearish scenario for the Bitcoin price, in a short term mainly revolves around the rejection of Bitcoin at the 10K level. The price of Bitcoin tends to surpass a resistance or support level at its third test. When it fails to do so, it becomes vulnerable to a steep pullback. Now, since May, the price of Bitcoin has attempted to break out of the 10.5 resistance level a total of 3 times, but every attempt was met with a rapid sell-off, which suggests there's a significant amount of selling pressure in the 10,000 to 10,500 range. We can say that again, as we've been retesting time and time again, only to be pulled back by the bears. Now, coincidentally, it's also the third time in a larger time frame that the price of Bitcoin rejected 10.5, with previous events in October 2019 and February establishing a possible triple top formation, as we can see right here in this chart. Now, a fall below 9K would indicate a breakdown from a familiar resistance level. Now, since Bitcoin fell to 6,400 and 3,600 respectively in October of 2019, and February of this year, bearish traders anticipate it to fall all the way down to the low 6,000s. Now we have trader Nunya Business found that the widely utilized Bollinger Band width indicator is showing a local top for Bitcoin, marking out the previous peaks rather accurately. They said spikes in the Bollinger Band width have followed the down-sloping orange trend line. Additionally, these spikes in the BBW have also perfectly aligned with peak in price. Will this occur again? Let me know your thoughts in the comments below. Now, other variables that may affect the Bitcoin price in the third quarter is the Dow Jones Industrial Average started to correct steeply for the first time in over a month after the U.S. Federal Reserve open market committee meeting. Despite positive developments such as declining jobless claims and the Fed's intent to maintain a low interest rate, investors are starting to become more cautious as retail fear of missing out, or FOMO, builds in. The uncertainty in the market and the predictions of top hedge funds of the stock market downturn may curb the appetite of investors of higher risk assets such as single stocks and Bitcoin. Pre-market data shows that the Dow Jones dropped 900 points on June 11th, erasing 8 days worth of gains in a single after hours trading session. However, positive variables in the findings of Fidelity Investments, which have around 2.46 trillion in assets under management. In a survey, Fidelity found that nearly 1/3 of institutions in the US have invested in digital assets such as Bitcoin or Ethereum. I covered this in a previous episode. Now, if rising institutional adoption makes up for declining spot and futures volume, there is a possibility that Bitcoin sees an institution-led rally for the first time in history. And I also want to mention once again, Grayscale Trust is purchasing more Bitcoin than is even available by miners right now. They're buying it up faster than it's being mined, or shall we say printed. The general sentiment around Bitcoin remains cautious optimism. The majority of traders are seemingly aware of Bitcoin's consolidation under a key resistance area, with major investors becoming flat or accumulating for long-term hodlings or holdings for now, such as Paul Tudor Jones, who said he allocated 1 to 2% of his overall portfolio into Bitcoin. It is possible that the number of hodlers increased in the past week by 2.7%, according to data from blockchain analytics firm Glassnode, because investors anticipate a low level of volatility throughout the third quarter of 2020, which goes to tell you a lot of investors, including institutions, are very bullish for what's to come here in the Bitcoin market. And now for our next story of the day. India plans Bitcoin ban even as its banking system gradually collapses. And before we break this down, let's take a look at the overall crypto market. Like I said yesterday, we got knocked down by the bears all the way to about 9,000 before rising back to where we're currently at, which is around 9,500. Bitcoin down 2.85% for the day. As I shared in the analysis, we need to retest 10K and then 10.5 before we can expect to continue marching forward. We have Ether down 3.2% for the day, trading at $236. I do feel personally that Ethereum and Chainlink are both two of some of the most undervalued cryptos or altcoins in the market right now. I'd love to know your thoughts on which projects you feel are undervalued. Then we have XRP down 3.6%, trading just above 19 cents. Chainlink down 5%, trading at $4.13. We have Mist Litecoin down 3.7%, trading at $44. And then Satoshi Vision down 4%, as well as Bitcoin Cash down about 5% for the day. And now taking a look at some of the top exchanges, Binance is up 41% with 7 billion in volume. Hobby Global is up 57% with 7 billion in volume. They actually surpassed Binance. Very interesting, right? OKEX up 29% with 3.7 billion in volume, and BitMEX up 26% with $2.9 billion in volume. All right, now for our next story of the day. The Indian government may ban Bitcoin. According to a report by Economic Times, the country's finance ministry has sent the proposal for an inter-ministerial consultation. The department then expects to forward the plan to its top cabinet, which operates directly under Prime Minister Narendra Modi. The move further allows the motion to be tabled as the bill is sent to Parliament. This news comes months after the Supreme Court of India reversed a de facto Bitcoin ban imposed by the country's central bank. And in its ruling, the apex judiciary has said, while we have recognized the power of Reserve Banking of India to take preemptive action, we're testing in this part of the order the proportionality of such measure for the determination of which RBI needs to show at least some semblance of any damage suffered by its regulated entities, but there is none. Very interesting, right? Nonetheless, a draft proposed by the Interministerial Committee in 2019 has noted Bitcoin's role in money laundering and terrorist financing activities. And I'm going to go on the record to share that I believe, in my humble opinion, that there hasn't been any more money laundering than with fiat currency, and that, my friend, is a fact. A senior government official told ET that the finance ministry is now looking to have a more effective and irreversible policy to contain such risk. And taking a look at this tweet here from Naimish, he went on to share, the government needs to stop this madness of deciding whether they want to ban crypto or not. Either do it so we can fight it or come up with better regulations instead of throwing a news bite every few days, creating panic in the public. Does this sound familiar? You know what I mean? The media doing what they do best, right? Order out of chaos and spreading fear amongst the people, even in India. And what makes this also interesting is India's proposal to ban Bitcoin surfaced at a time when the country is facing one of its biggest economic crises. That's right. Analysts blame the global pandemic. How convenient, right? The plandemic. But in reality, the country's root economic problems existed before the virus. Now, that's a fact. And so did our problems in the government within the United States. Now, one pivotal weakness is the credit crisis, a long history of bad loans that threatens its entire banking system. The concerns escalated back in 2018 when IL&FS, a top financier, nearly collapsed and left a trail of bad debts. Meanwhile, D1 Housing Finance, an informal bank, went bankrupt over similar issues. Now, in March of 2020, private banking firm Yes Bank had to be bailed out by the Modi government. Quite interesting, right? And with cash flow strapped, the crisis now looms over India's ability to recover from the pandemic. Now, Bitcoin demand, is it in high demand right now? I'd say so. Escapist investors have started looking at alternatives to reduce their exposure from the Indian market, with expected slow growth leading to lower returns across the bond and equity markets. Many have moved into Bitcoin as their hedge, as they should, right? Data released by Bitcoin marketplaces Paxful and Local Bitcoins showed a decent surge in crypto trading in India, while Local Bitcoins host trades worth 14.5 million since March of 2020, while coins traded via Paxful amounted to 15.36 million worth of deals. As we can see right here in this chart, this comes from Useful Tulips. So thank you. The surge in demand has also led significant firms to choose India as their next crypto destination. Binance, the world's largest crypto exchange by volume, earlier this year acquired a regional peer-to-peer crypto marketplace. The latter's CEO, Nishil Shetty, called the Indian crypto market a sleeping giant, noting that the court's Bitcoin ban reversal would help create hundreds of startups in the country. But with the latest ban report, Mr. Shetty expressed his disappointment with the Modi government, stating that they do not understand the technology. And you can say that again, or they do understand the technology enough to know it's a threat to their economy, their ecosystem, and their fiat currency at the end of the day, because they can't control it, right? And if they can't control it, why do they want to recommend it? So they're giving you these bans to create fear so that citizens do not use it. But as we've witnessed before, I think the more scrutiny of a ban regarding crypto and Bitcoin in any country is just going to create more desire for the people to use it, especially to hedge against their dwindling fiat currency at the end of the day. And now taking a look at the overall crypto market cap, we're sitting at 268 billion with 107 billion in volume in the past 24 hours. And the current BTC dominance has been back on the climb at 64.9%. And now taking a look at the top gainers within the top 100, we have AVE, only up 5%. This is the top coin within the top 100, as most of the cryptos are currently in the red. But we can also see Digibyte up almost 5.5%. Go Digi. Let me know if you're bullish on Digi in the comments below. Trading at 2 cents. Loopring up 3%, trading at 10 cents. Theta up 1.7%, trading at 24.5 cents. A BBC coin up 1%, trading at 10 cents. And then we have some stable coins such as True USD up 0.06%, USD coin, Paxos Standards, and the list goes on. And now for the biggest losers within the top 100 in the past 24 hours, Maker down 12%, trading at $606. Numeraire down 10%, trading at $25. Zilliqa down 10%, trading at 2 cents. Electronium down 10%, trading at 0.006. Quant down 9%, trading at $7.25. And Komodo down 9%, trading at 75 cents. Which coins are you most bullish on at this current time? Let me know in the comments right down below. And now let's check out the BitMEX margins. We can see the bears are obviously back in control, leading with a whopping 182 million in superiority in the last 24 hours, with shorts leading 53.7% versus 46.2% longs. Are you bullish or bearish? Holla at your boy. Now for one of my favorite indicators is the Crypto Greed and Fear Index. Shows we're currently rated a 38 in fear. We were neutral just yesterday, rated a 52, last week a 53, and last month we were a 41 in fear. And if you're not familiar with the Crypto Greed and Fear Index, extreme fear can be a sign that investors are too worried. This can be a great buying opportunity. And when investors are getting too greedy, that means the market is due for a correction. And I want to encourage you to check out the description right below this video by clicking show more in the description right down below for a detailed analysis of what's going on in the market. This goes for all 440 plus videos right here on my channel. Also have some very helpful resources for you to plug into, including the blog to my podcast, which could be found at cryptonewsyes.com. Not only is this updated every single day, it also allows you to download the latest episode of the show in MP3 format, so you can listen to it on your way to work, in the car, when you're working out and about, or on the go. Also, be sure to subscribe on YouTube. The direct link to do so is cryptonewsalerts.net. I greatly appreciate your support. Also, we can be found on all the major podcasting platforms, including Apple's iTunes, Spotify, Google Play, Stitcher Radio. So whichever podcasting platform you're active on, please do help support the show. It's greatly appreciated. You can also follow us on Twitter to receive daily crypto news alerts. My Twitter handle is Crypto News Yes. And for those of you active on Facebook, as I am, I do have a private crypto Facebook group entitled Crypto Alchemy with over 17,000 cryptopreneurs just like yourself from all over the world. To become a part of this, simply click this link, request to join. I'll be sure to plug you in. And for those of you active on Telegram, as I am, I also have a crypto Telegram chat. To become a part of this, simply click this link. You'll automatically be added, and I'm looking forward to connecting with you personally on the inside. Well, that's going to conclude today's show. As always, I appreciate you tuning in and journeying along with me inside this incredible crypto revolution. If you gain value out of today's show, be sure to smash that subscribe button and turn on all notifications to receive daily premium crypto news alerts. And real quick before I go, if interested in learning from the Wall Street legend himself, Teeka Tiwari, who picked Apple back in 2003 and Bitcoin in 2016 as he shares his #1 pick for the 2020s, they're calling it the investment of the decade. That's right. Right now there is a mad rush in corporate America. It involves Amazon, Google, Microsoft, and Facebook. They're betting on a new technology that the World Economic Forum projects will soar 295,000% over 7 years, but it's not AI, the Internet of Things, or 5G. To discover what it is, smash the link below this video in the description. It'll take you here to watch this exclusive presentation by the one and only Teeka Tiwari. Check it out, and I look forward to catching you on tomorrow's episode. Peace.